You have a small business, you've probably heard of an S-Corp. And S-Corps are great because they can potentially lower your self-employment tax substantially. And self-employment tax is a really costly burden. So lowering it is obviously a great thing to do. Now with an S-Corp, there are two main ways of paying yourself. You can take a salary, basically meaning that you just get a steady paycheck every week or bi-weekly or whatever, or you can take distributions. Think of it like a big cookie jar where you can just take at your discretion. And you see, distributions are not subject to self-employment tax. And like I said a little bit ago, self-employment tax can be very burdensome. So if we can avoid self-employment tax, heck yeah, let's do it. Let's pump up our distributions and only take distributions. But the problem is with S-Corps, you have to pay yourself a reasonable salary. So the question becomes, how do we allocate between these two channels? Some people will say for every dollar of salary they take out, they're going to take $1 of distribution. So a dollar for dollar or 50-50 split. Or they may say it's a 60-40 split or 40-60 split or whatever, usually some predetermined split between, again, these two channels. But what's ultimately the correct answer? Well, it actually depends. You see, the IRS requires S-Corps to pay a reasonable salary. The problem is that reasonable salary for one person is probably not going to be a reasonable salary for another person. You see, it's going to be tailored to you specifically based on like what service you're in, what exactly you do, where your geographic market is, how much education or time you spent in it, or how many hours of year you work. All these things and even more are going to come out to what exactly your reasonable compensation could be. See, we have things that can actually help us, that kind of guide us as to what our reasonable compensation could be. There are things like salary surveys out there. You can use Indeed postings for things that are similar to what you're doing in order to get some sort of basis. If you left a former employer and said, screw you, I'm going to go work for myself, and you're doing the exact same thing, you can use your prior salary as a starting point. Now, what happens if your job doesn't have readily available information about salaries and pay ranges or whatever, given, again, your job? Well, it can get a little tricky. Maybe you sell just fans, just only fans, right? Catch my drift? Get it? Drift, fan? Okay. And see, this is when it gets a little more tricky because, again, there's not a lot of information to determine what a reasonable salary should be in that specific case. But again, we still need to look something up in order to have some sort of basis of reality as to what a W-2 wage earner would earn in that specific instance. So if you're struggling to come up with a reasonable compensation versus distribution ratio of what are going to get paid, it's not always a simple 50-50 split or anything. It's going to be tailored to you specifically as to what a reasonable compensation would be. And then you just go from there. So that's really about it.